Good morning, traders. Government reopening hopes are finally lifting a major overhang. The S&P 500 staged a sharp bounce yesterday, breaking out of its broadening wedge consolidation that bottomed out at 6,640 with a clean retest now and confirmation, as well as, of course, being pushed higher up down at the low um, with the support of a hidden bullish divergence signal. So I see this as the retest and confirmation of potential continuation to the upside. Let me walk you through what just happened and where we're headed next. So early last week, actually, we had these momentum divergence showing up. On Friday, we had some news around the reopening. And then yesterday, of course, what happened is that um, a bill passed. I will get to that detail soon. So price hits a new high. I would say multi-week high. November, beginning of November, we haven't reached these levels. Uh, and the RSI, of course, reached a overbought level now. That's why we currently see what I believe to be a slight pullback. Um, sure enough, we did see a sell-off over at 6,855. We are seeing that actually continuing today, which might be in anticipation of the signature of Trump. So this is probably the beginning of a pullback, okay? And we are outside of the wedge pattern, okay? And yesterday's bounce for me is a reopening of new records. So what happened is that the Senate finally moved on government funding. A breakaway from Democrats plus Republicans actually passed a measure Sunday night, paving the way for the House to vote and the president to sign. That is after 41 days of shutdown headwind and federal workers being furloughed, food delayed, flight disruption. So markets are actually pricing in the relief. They have been pricing in that relief. That's real economic impact clearing, which of course lifts equities off the lows. The wedge breakout is also textbook. We've broken above 6,780, 606.8, you can call it, just round it up. And on the RSI, we have went overbought. Now we are sliding towards the 50 line, which I believe it could be a reset since we're looking now at the 1 hour only, of course. But in case we do cross below, it wouldn't be surprised to go lower than 30 if acidity continues because it's Tuesday today. So there is indication that the bill could pass tomorrow and go into signing, be also signed tomorrow. So I will be looking if that happened today or tomorrow for that move to continue higher, looking for new record highs with target at 7K. Now, if that drags on a little bit more, then we could see a deeper decline, and I would be looking for prices to go below, perhaps to the 38.2, perhaps even lower. It really depends on how much it's going to drag on. But despite, of course, looking at the divergence and outside of the wedge, this is just on the 1 hour. Okay, that's the one thing to remember. And the other thing to remember is this, that gold has also received support because dollar has been weakening. The risk that we are facing here potentially is not new, actually old, but delayed data being released. This creates some sort of uncertainty until we see the data coming through, because markets are starting to price in again this risk of what are the data going to show. Okay, and then of course we have November 19th, that's next week, we have Nvidia's earnings, right? Which is another very important catalyst. So for me, if the situation continues as now, I will be looking for prices to go back to the previous high. How can this be traded? A long position perhaps at 6,820. If you want to go early with an aggressive entry, stop below the previous low, target at the previous high, okay? And whether you want to do partial exits, this is up to you, with a break even, of course, entry after prices move around the 6.9 or so. On the other side, if prices do come fast lower down, break the 23.6 and come at 13.2, perhaps it might be time to start considering closing that trade. We want to remain below that, above this trend line. Ideally, we don't want to revisit that low, because revisiting that low, it's going to add more risk to the downside. Okay. Now, as I said, this is just a short-term trade for me, with further clarity, of course, required from BLS, because we need to know when these delayed releases are going to be published, if indeed the government reopens today or tomorrow. And if tomorrow, it might be a bit of a too soon to see the CPI coming out on Thursday, but maybe retail sales and PPI on Friday would be possible. But anyway, uncertainty is likely to increase now, although we do have some clarity on the US reopening. Okay, so stay sharp out there. Volatility is coming back in my mind, but we have clear levels, and we see a trend that has just flipped to the upside. Trade with conviction, but also obviously respect your stops.